Hey, we'll be starting in 1 minute. Just a lot of traders are coming into the room, so I'm just gonna give them another 30 seconds to come on in, and then we're gonna start. I'm not going to use any JPEGs. I'm going to describe the system right off the charts. Okay. This is Mark from Right Line Trading. Excuse me. I have a little bit of a cold, so if I cough a little bit, just try to ignore. But first, this mandatory government disclaimer. That all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors, subscribers within futures, forex, or stock markets, or for any profits or losses that may be incurred. And we all know that there's substantial risk associated with trading. Careful consideration of your financial position should be made prior to trading. Never risk more than 2% of your account on any trade. And we are not licensed commodity trading advisors. And with that, what I'd like to do is introduce you to our stock scanner. Now, our stock scanner this is it operating right now. I started it on 3 stocks: Apple, Electronic Arts, and Amazon. And I just want to talk a little bit about 90% of the other stock traders that are out there, and what they do and how this is different. Now, most stock scanners really are not very effective, and there are a million out there. And what they do is they scan for market patterns, and one of them is they'll look for a breakout. That's one pattern that they'll look for. The other is that they will look for a rising or falling triangle. And depending on their sophistication, they may look at a breakout of a channel. But what they're looking at is they're looking at patterns. And here's a rising triangle. It's just a series of sequential higher lows. The highs can be pretty much the same, but it just shows you that the bulls are in control and they're going to be moving the market up and down. And eventually, the scanner will anticipate a breakout. Now, here's the problem, is that the scanner is going to detect the breakout here. But what you have to do in order to trade a rising triangle appropriately is you have to wait for price to come back, test support, and then rise. And these are the kind of signals that these scanners don't give you. On top of that, breakouts, rising and falling triangles, bull flags, and bear flag patterns fail about 70% of the time. And I was actually just listening to a webinar last night from a really smart guy talking about a program completely different than this. And he was talking about these patterns and also about how 70% of these of these patterns are going to fail. Now, you trade a channel the same way. You price inside. Now, there are things about a channel that a scanner cannot tell you. It won't tell you. First of all, is this. Is that when price goes into consolidation and forms a channel, it almost always breaks out in the direction it went in. So if it, excuse me, if it goes into the consolidation period in an uptrend, it's more likely to break out to the upside. And again, it's going to signal you an alert on the break, but you have to wait for it to come back and test support and then trade the move up. Now, just trading a breakout, which a lot of traders do, they trade these momentum breakouts, are going to fail 70% of the time. And this is what most scanners are based on. Some type of price pattern, which is just not as powerful as it needs to be, which is why most scanners don't get you anywhere you need to be. Now, our scanner is completely different, and I want to go over each of the components separately. And our scanner also works. Now, you can use it on as many stocks as you want. It will monitor 100, 150 stocks. The number of stocks that you want to trade or you want to watch for a potential trade entry is unlimited. Now, let me just, I'm gonna close Amazon, and I'm gonna show you Electronic Arts, because it's a little slower of chart. Now, first of all, let's take a look at this background color. Now, the only time that we want to take a trade is when the market is in a multi-time frame trend. And this dark pink is telling you that the market is in a multi-time frame trend. And I'm going to just define that for you. Remember, what our indicators are trying to do is they're trying to track money flow. It's not easy to do. A lot of software says that they do, but it's something that can only be done indirectly. Can't be done directly. I mean, you can't determine if institutions are selling or buying a stock. You can only look at their footprint. And what this is doing is it's examining the footprint they leave when they do. Now, this is looking, the chart speed is a 2 Renko. Now, you don't have to set it at Renko, although that's what we've got it optimized for. And I'm telling you, it's going to give you the best entries. I mean, if you want to try it on time or tick, you can do it. And I can show you how to set it up. But what I'm going to show you today is how to look at the entries on a Renko chart. Now, a 2 Renko means that this background color is looking at the trend of the 4 and the 6 Renko. If this was a 6 Renko, it would be looking at the trend of the 8 and the 10. And these are simply higher time frames. They're bigger candles, so they take longer to form. And what we want is we want the institutional traders to create a multi-time frame alignment in direction. Now, there's 3 down colors and 3 up colors. Color number 1 is bisque. Color number 2 is light pink. And the color that we want, that we look for on the scanner in this first box, is this dark pink. This is where you've got the most powerful downtrend on the 2 higher Renkos. Now, if you're trading a 2-minute, it's going to look at the 6-minute and the 18-minute automatically. There's some things you're going to have to set, but it's automatically going to look at a time frame that's 3 times higher and 3 times higher still. That's part of the internal algorithm of the indicator. Now, it's important to know what's going on in these 3 different colors. And what I'm going to do is I'm going to show you on paint. Now, remember that the market, by design, wants to move and chop. It's only going to form a multi-time frame alignment and trend when the institutions are driving price, because it's very difficult for this to occur. Now, there's a guy, I just saw his book on Amazon, actually, no, on Facebook. They just made an audio book out of it. He wrote the book in the year 2000, and his name is Alexander Elder, and he created invented what's called the triple screen method. And he did not believe that simply by looking at price on your trading chart, you had the ability to get a low risk entry. Everything had to align on your 2 higher time frames. And those are tough to watch, especially if you want to watch 50 stocks. What you need is the scanner with this first color telling you what that background bias is and why this alert's going off, telling you there's a potential trade on Apple and a potential trade on Electronic Arts. Now, I'm going to describe to you how that background color occurs, why it occurs, and how the different colors are the importance of the different colors, and why we only are going to look for a trade on one color. Now, I don't know what happened to my paint. I'll have to bring it back up. Let me bring it down right to here. Now, when you have this downtrend alignment, you have the 50 heading down. And it's the position of the 15, or this faster moving average, that's going to really determine the color of this background. Now, on the 2 higher time frames, if the 15 is heading down but hasn't crossed the 50, you get this bisque color. And you can see how this is a riskier trade, because it's a major event when that 15 crosses the 50 to the downside. When it's still above, there's a lot of additional associated risk. Now, this does more than just track that. I'll just blow. Here's my paint. I have 2 paints open now. I found them. What it also tells you is that price is here. It's below the 50 and the 15. So all support is broken. So first you get the bisque color. Then as the trade matures, and the 15 crosses the 50 to the downside, you go to this dark pink. and this is on the two higher time frames that you're trading. Price has to be below both the 50 and the 15. And you're in a very strong downtrend. Now, it is not making an assessment of price on your trading chart. And you can see that when you have that dark pink background, price almost always falls because the two higher time frames are aligned in this strong direction to the downside. Now, when the 15, so the bisque color, and it's easy to see these colors. If you open up the indicator and you go to the bias, you can see you've got the dark pink, you've got the bisque, which is the second most powerful, where the 15 has not crossed the 50, and then you have the misty rose. The misty rose is when the 15 goes flat. Now, price is still here, below the 15 and the 50, but you lost a lot of power in the trend because now you've got a flat 15. So that light pink only allows you to trade short. The bisque only allows you to trade short, but they're riskier setups. And what you want to do with the scanner is only take the potentially lowest risk trades possible. You're scanning, excuse me, for the perfect entries, which I'm going to show you, which are going to be the scanner alerts. And when they evolve and hit, the likelihood of getting a loser is extremely low. Now, I'm just going to show you the reverse for an uptrend. Now, on the uptrend, you have three up colors, and they really correspond exactly to the down colors. And there are the three. Now, the first color, now, in order to have this color, you have to have the 50 sloping up. And the first color we'll talk about is when the 15 is also heading up, but it has not yet crossed the 50. That's this cyan color. You've got a strongly trending market, but that 15 hasn't crossed, and that's a big deal. Now, price must be here. It's got to be above the 50 and above the 15. Hopefully, the trade will evolve and the 15 will cross the 50. And that's when you get this dark green. And that's when price is almost always going to rise on your trading chart. The only thing that you need is an entry trigger. You know the direction. And just like on the in the downtrend, when the 15 flattens, you go to this blue. So price is here. Can't trade short, but the strength and momentum of the uptrend is a lot weaker when the faster moving average has flattened itself out. So what we look for on an entry is this dark green or this dark pink. That's the strongest potential entry we can possibly get. And since we're scanning for perfect entries, see, here's a perfect entry. And I'll define it more. I'm going to define it more in a minute. But likelihood on this entry of getting a loser are extremely low. The dashboard will be firing and telling you, heads up, you're very likely to get a long trade here. Open this chart up. And what I do is I take the chart. I've only defined background, but what I do, and the way you can look at many, many markets, is just fold up the chart. And what I do is just put it below the scanner. There's no reason to look at it if there's no signal. So you can just line these up. You can actually make this even smaller. So you see nothing. Then if you see this amber alert or yellow alert, you just pop the chart. Open it up. You're going to be on the right edge. And you can see how the trade, how price is poised on electronic arts for an entry. All you're going to have to do is spend 15 seconds looking at it. You determine there's a high probability for an entry here, but you're not going to get one. Now, this line here, we all know that these markets do not move in isolation to each other, nor does any stock move in isolation to each other. So what we do is, first of all, we determine, is electronic arts, which of the three indexes is weighted the most? Is it weighted most, if you wanted to pick another correlative index, would it be the NASDAQ, the Dow, or the Russell? And obviously the one you would pick is the NASDAQ. So as part of this line, we're looking at the trend of the NASDAQ. And as part of this trend, we're looking at specific ETFs and other correlative markets that should rise when electronic arts rises. So what we're doing is we're linking this market into sort of that global network that tells us that EA is not going to rise alone. And if we don't have this line telling us, and this is really essentially a great way of tracking money flow, because we know in the course of a day that the institutional traders are simply rotating their money from asset class to asset class. This morning, when the market was going into a major nosedive, the risk was off. And what the institutions were doing were putting their money into bonds, into notes, into precious metals, into certain currencies. Now it looks to me like risk is on. And now they're pumping the market up. That movement of money from asset class to asset class is tracked with this line. So what we're doing is we're looking for a green line here. Now, it has a strong correlation with background bias, because when you have money flow into electronic arts, this is when electronic arts is going to form that multi-time frame alignment to the upside, just like that. It gives you an absolute direction that you must trade. Now, what we've done here, and I'll answer all questions at the end, but what we've done here is we made this very configurable. And this is something that we've never done before. But before I get to that, let me show you the oscillator. Now, the oscillator actually gives us our entries. And it makes sure that we don't take a trade in an overbought or oversold environment. Now the oscillator severely constrains when we can trade because we need an oscillator entry. And let me find one on Electronic Arts. Now you can figure that you may only get, it's right here, one trade a day per stock. But if you monitor 100 stocks, you've got 100 potential entries. So trust me, you're never going to want for perfect entries. And here's one of them. Now let me see if there's another one, because I'll go through a bunch of stocks. Now obviously this just doesn't make it because you don't have the quant and you don't have the best background bias. And we're going to cherry pick for the best possible trades. So our goal here is to always avoid losers at any cost. And right here is your trade. And it's a really nice trade. You can ride this trade all the way up. Now, and remember, our goal is to cherry pick the absolute best trades, not to give you marginal trades, not to give you trades that have, as far as we can ascertain, any associated risk. And you're going to get plenty of entries. Now the oscillator, because price on a Renko chart moves in a geometric fashion, moves very fast. This is an exponential oscillator. So what it does is it takes the oscillator formula and raises it to the second power. So it's very fast. Every time it crosses the magenta line to the upside, you're going to get an up triangle. And every time it crosses the magenta line to the downside, you're going to get a down triangle. So all of these are potential entries, but you're only going to take the entry. Now, right here in real time, that was probably an entry. Right here. So it's the oscillator that gives us the entries, and it's the background bias and the quant line that confirms one, money flow, and two, the multi-time frame or the multi-time frame direction and trend. Now this 15 and 50 are unique, and I think they're just worth mentioning briefly, because they're really unique moving averages and they really work great. We wanted to have a fast moving average, just like we want to have a fast oscillator. So what we did was we took a 50 exponential of a 50 exponential. We actually repeated the formula twice. And we got a real fast 50, but it's very smooth. And the same thing with the faster moving average. What we did, I mean, this is optimization. It's mathematical optimization, looking at every parameter. This is a 15 exponential of a 15 exponential. And it's much better than a 15 exponential if you take the same formula and repeat it twice. And I'll show you real quickly. If you take your 15 EMA and you stick it in, it's much more subject to little tweaks in price, whereas our indicator is much smoother. So you have these two candles bent the 15 EMA down, but our moving average just stayed green and stayed up. It's not subject to getting contorted or twisted by just a small counter trend move. So you have this speed, but you don't have that choppy movement that an EMA gives you. And you can look on this move down. It's nice and smooth all the way down. Whereas the EMA gives you these bounces. One single up candle gives you a bounce. Two single up candles gives you a bump. You don't get that. So it's a much better moving average to trade. And remember, the 15 has to be red and the 50 has to be red on a down move. And because this line is smoother and more stable, it's going to get you better background color. Because you're not going to get this dark pink on the higher time frames unless the 15 is red and heading down. Now, here's where you get the configurability, which we've never done before and which we've just added. There's an input of 8 for the bias, and there's an input of 8 for the quant. And what we've done is every time you increase the Renko size, you increase this number by 1 fib. So this is an 8 on a 2 Renko. If you traded a 4 Renko, you would trade a 13. If you traded a 6 Renko, you would trade a 21. If you traded an 8, you would trade a 35. If you traded a 10, you would trade a 54. And what that does is it slows the background bias down appropriately and slows the analysis of the correlative markets down appropriately so that you can really trade any time frame you want. So we also have the inputs if you want to trade a time chart or if you want to trade a tick chart. The tick chart, you just go to the higher fib numbers. Range is exactly the same as Renko. But we're going to configure this for you so you don't even have to worry about the initial inputs and setup. We're going to do all of that for you. So you don't have to worry about any of it. Now, here's the EA. What I did is I put up a few stocks, and then when I'm done looking at these, you can give me any stocks that you like. I'll look at any stock ticker at all. And I think what you're going to be pretty amazed by is the fact that you're not going to get that frequent an entry, but it's going to be very difficult to find a loser. Now, here's the one other thing that I wanted to mention, and that is, let's say you've got the chart folded up. And you get an alert. Now, if you scan too many stocks, a great problem to have, and you're going to have it, is you're going to get lots of alerts at the same time. But you've got volume here, and you could potentially trade whatever stock has got the biggest volume. Or if you want to trade a mid cap or a small cap, you're going to pick that stock. But when you pop the chart like this, you're going to go, obviously, you're going to be on the right edge. And you can determine, you see the up signal already occurred. So you're not going to get another one until the oscillator falls all the way below this cyan and then comes back up. So you've lost the long trade here. And you're not going to get another one. Now, the market's dead. If we have a fast-moving market, you could potentially get a swing around and an entry pretty quickly. But when it heads back down, you're going to lose the signal, not going to get the alert. And then when it comes right back up again and aligns, you will get the alert, hopefully with the oscillator signal. So all it does is take literally a few seconds to scan. Like right here, you have an oscillator entry. There's no background. So you know you're not going to get a long trade until you get them down and it moves up, in which case you're going to get a new signal, and you're going to get no signal here anyway. So you can, when you pop the chart, you're going to know in a second whether you have a potential trade. And if we go through Apple, now this is a 2-unit, this is a 4-unit Renko. And right here is a trade. Actually, quite not exactly. I don't want to show you in betweens. I only want to show you the cream of the crop. Here's one right here. Now, one of the most powerful features of the system is its inability to give you a loser. It's very, very tough to get a losing trade. And we're going to look here at it. Now, here's a small one right here. And this could be potentially a loser. You're not going to, I mean, those are few and far between. Let's find another one. Well, here's your trade right here. Let's take a look at a different stock. Let's take a look at Amazon. Now, Amazon is on a 10-unit Renko. It's on a much, much slower chart. There's your long trade right there with the 15 just crossing the 50 on your chart. But this is an alert on the scanner. You can take this trade all the way up. It's a perfect entry on Amazon. That's a 10-unit Renko. Now, the risk to reward is amazingly high. Now, this is a $3.76 move. Your risk on this trade is 91 cents. So you're going to risk 91 cents, and the average winner is really big. You get 4 to 1, 5 to 1 easy on the risk to reward. You're going to get a stop out on a reversal candle, and it takes 91 cents of movement in the counter trend direction to give that to you. Now that's just about a trade. We're not going to look at it. We're only going to look at the perfect entries. And that just missed. Now, this is a little bit fast for Amazon. I was just estimating. Now, in real time, that is going to be a trade. I'm not going to go into why, but trust me, you're going to get a scanner alert, and this background bias on a live chart would have been green. And it's the fractal nature of the indicator would have given you a winner. But I'll show you a few more. Again, we're always looking for potential losers. And I'll tell you, today I had a tough day trading. I had a 7-tick move on the E-mini with a 5-tick first target, and I had one, and I got 4 ticks of slippage. And that was my third trade and third winner to take me out for the day. And it wound up handing me a loser because of all the slippage I got on the trade. I mean, who ever heard of an entire point of slippage on the E-mini? but I got it today. And it really did hurt my, now this is a small move. And I think I've set Amazon a little too fast. I think it needs to be traded on a 14 or 16 unit Renko. But we'll keep looking. It's really close. Here's another winner right here. And you'll see here, you don't have the right background bias. So you get no scanner alert for this long trade. Here, no appropriate background, no scanner alert. And you just have too many candles. I'm going to go to, let me go to another stock. And then I'm going to let you pick them. Whatever you want to see, I'll show you. Apple, Amazon, and EA. What I'll do is I'll take Electronic Arts and let's change it to another stock. I'm trying to think of something that's popular. Let me look at my ticker. It's not a huge amount of money. It's a little bit easier to day trade. Now this is real day trading. This is not looking at small biotechs. It is not finagling. It's really getting a multi-time frame alignment in the direction of money flow with an oscillator entry. I mean, this is real day trading. Why don't we look at Square? It's not coming up. Hold on. You know what? I'll look at Shopify. I really like Shopify. I've traded it a few times. Oh, it says the instrument already exists. I don't believe it. It is there. Okay. Actually, you know what I'm going to do? I'm going to show you the cues. The cues are terrific to trade. And then I can show you Shopify, and then I'll answer any questions. So let's just go to find the cues right here. And let me bring up the Q scanner. It's hidden. Let me find it. Hang on one second. There's Apple, there's Amazon. Where the heck is where's my other scanner? Apple, Amazon. All right, well, I can't, for some reason, I cannot see it. Let me just take out this EMA. Now, I don't know where it is. It's buried somewhere. But here are the cues. Let's go from the beginning of the day. Look at that trade right here. A perfect trade. Now with no background bias, the market's almost always going to chop. That's really close. We need the dark pink or we need the dark green. And here's your entry right here. And up. Your entry and up. Your entry and up. I mean, you can walk away with a lot of money on the Qs. Now, here's another entry and up. And you can do the same thing with the SPY. There's another entry and up. Now here's a small move right here. Well, that's a potential loser. But remember, you're risking here on 11 cents on a move. So we're looking at the risk per share. It's only 11 cents. So if this stock comes back against you, you're out 11 cents. And if you get a winner, here's 29 cents. So it's close to 3 to 1. There's another entry and another winner. And there's a whole bunch of chop. Now I could go on and do this, I swear, forever. And let me quickly just go to, I'll go to Shopify. Now the things you want to trade, obviously, are things that have a lot of volatility. I mean, if you're going to day trade a stock, the best stocks to trade are the ones are tech. I mean, they don't have to be expensive tech, but that's what's going to give you the most volatility. Now, Shopify, we have to trade on a 10, a 4, and a 20. To change the Renko size, and we also have to change the inputs here to 13. Obviously, you can't trade the same speed on a $50 stock as you do on a $150 stock. Now here we go. Now here's your first trade. I mean, I'm going backwards. There's a not wrong background color. In real time, this is going to make it. Same thing here. It's a difficult explanation, but in real time, I've opened this platform late. And because these are fractal indicators, they're going to come in a candle late. It's just the way the Ninja platform is configured. It's perfect live and never repaints, but it's going to lag a candle. Like right here, this is another entry and down. There's nothing here. You've already got a bunch of winners on Shopify. Now, it's also great if you want to trade a longer term time frame and you want to trade options. If you're looking for a buck or two move on an at the money or in the money option, this is going to give you your entry. Just misses right here, but it's just not a trade. This is a trade, just not a big one, but it would be a winner. Now, that's Shopify. Now, I'll be more than happy to show you any stock you want and answer any questions. Let me just show you the offer for the scanner. Now, the scanner's going to, well, there it is. The scanner is going to get you really multiple great entries. And it's the most conservative entries possible. That's why it just misses some of those trades. And that's why some big moves are not part of it. Now, I'll show you the offer. The first 5 are going to get a mentorship session with me. And it's scheduled for 2 hours, but I'll do more time than that. You know, I think I have 2 or 3 people to schedule tomorrow, because there actually is one other trade that you can take that I don't want to talk about because it takes a little more configuration. The only thing that's important really is the validity of the oscillator entry on the multi-time frame alignment, the strongest trend, dark green or dark pink, in the direction of money flow with the oscillator entry with the 50 up and the 15 up and price above both. That's going to give you very, very few trades. And when you have chop, it's going to really keep you out of chop. And most importantly, it is not going to let you take a loser. Very rare to take a loser. We saw a couple, but I also remember the risk to reward here is exceedingly strong in your favor. Now, again, you're not looking for like a 200% move on a small biotech that has a whole bunch of people piling in. That's a $1.25 stock. I mean, that's really not day trading. And that's what a lot of systems, it's what a lot of rooms do. And I'm telling you, they're not going to make money. Most breakouts don't follow through. And you simply have to take a multi-time frame trend trade in the direction of money flow on an entry that's neither overbought nor oversold. Now it's normally $24.99. It's a lifetime license for $9.99. We configure the whole system for you. You don't have to do anything. Now, if you own the whole software, you get it for $5.99. Now, you're always going to get free updates for life. I mean, it's always our intention to try to make these things better, and we always do. I mean, that's really the optimization process, is you're never done. So we're always looking to upgrade the system. And everybody gets a 10 module educational training sessions on video, our video tutorial library, which has 450 videos. And the first 5 orders get the mentorship session with me. And I'm going to really go over a lot of information with you. And one single additional entry that's really a low risk entry that's not on an oscillator signal, but you still need the scanner to give you an alert. You can't trade without that blinking alert. That's mandatory. And again, the best way is just to keep these charts folded up and not look at them, because right now the signals are just dead because the market's stopped. But in a normal market, these signals are going to start and stop. So you're going to have to be on your toes if you're going to watch 50 or 60 stocks. It's really up to you how many you want to watch. Let me tell you something. You can day trade the Qs and the SPY on this system and make really good money. But that's up to you. So let me answer any questions that there are. Hang on one second. Okay, let me pull them out. Good morning, good evening, everyone. How's everyone doing? Hey. Okay. Hang on. Let me go to the top. Yes. Yep. Find the perfect trades, DC. Okay, Frank, I know Renko bars. But could you spend 1 minute what a Renko bar is? Just recall quick basic out. No, let me, that's a fair question and I'll show you. Renko bars are the difference between a Renko and a Renko is gigantic. Remember that in a Renko chart, you just get a Renko brick. And I'll switch this chart. Let me move it to earlier. This is 9:30 in the morning. Let's just move it. All you do is get bricks. So let's take a look at a regular Renko. Now, it's my warning that you should never trade Renko. And I'll tell you why. First of all, you have absolutely no idea of who's in control of the market. There's no price action or market structure because the only thing a brick forms is an open and a close. That's all the information you get. And you have no idea what's going on inside this candle body, which is not good. Also, oscillators, which are commonly used on Renko charts, don't work. And the reason no oscillator will work is because it takes 4 components of each candle to create an accurate oscillator tracing. You need the high, the low, the open, and the close of every candle. These are the 4 parameters you need to trace out an accurate percent K. And this is really a percent K. This is the oscillator line. And you can see it's just tracing out price. That's all it's doing. It's doing nothing. But when we change to Renko, we get wicks. And that's the huge difference. Whoops. Let me change that before it. I can't. Hold on one second. Let the minute hit. Oh, nothing's happening. Hold on one second here. Let me close it. Go back. Go to Renko. And the input is 10. Now, in the mentorship, I'm going to teach you what these inputs mean. But what they do is they define the size of the candle body, define the size of the wick, and define when you're going to get a reversal candle. And I'll show you some things that are a little remarkable too about Renko. But you can see, we know that on this candle, the bears tried to push the market all the way down. And they formed this wick. They failed, and the market went up. And in fact, one of the things we look for when we trade in the trading room is this dual bear failure. these two wicks that come back, in which the bears tried to pull the market down and reverse it. They couldn't. The bears tried to pull the market down. They couldn't. The second entry is a great long trade. Now, these are some of the things we're going to talk about in the mentorship. This is why Renko is so superior. Now, there are other Renko. There's Wicked Renko. There's a couple that give you the wicks, but I believe that Renko, for me, is the best. I like the way it forms in a trend, and I like the metrics on the reversal. Although we set them up, it really does catch a nice trend. So I hope that answered that, Frank. Yeah, I mean, you can do a 60-minute. Yes, it can. Dave, if you want to do end of day daily data, it will. But you're going to have to trade, obviously, a very long time frame. We'll configure it for you and set it up for you. But I'm not sure if end of day data gives you all the data for the day. But if you're not interested in trading a live market, I mean, if just getting the assessment at end of day, it's going to give you a completely accurate assessment. It's going to show you all the entries. The problem is if it's just EOD or end of day, you're not going to get the triggers live, but it's going to trace out an accurate chart for you. So it can do that, yes. Sure, Victor, let me see.
Connection lost.
Is it the same? It's a little bit different, Victor. What we've done is we've modified it quite a bit. The markets that we put in here, very difficult on stocks. On futures, it's much easier. But you can see how well it does in tracking the direction. And I can tell you this indicator is not looking at price on your trading chart. Price is rising because this is green. This is not green because price is rising. That's what makes it an independent variable. The reason it's independent is its color is not determined by any price movement on this chart. This is rising because this line is green. This line is created by other instruments, not by Apple. Now, there's not 100% correlation, but there's a very strong correlation. And this is why, so you have this whole move down here, and this money flow line is red. And all of a sudden, even though the price continues to fall, the line goes yellow. If it was simply tracking the direction of price, there's no way it would turn yellow. It's because it's looking at something else. And eventually, that money flow line resumes. And we could never create an indicator with a 100% correlation, or then we'd have 100% winners. So that's how it works. And it is modified from the ones we've had before. We've never had the configurable with the inputs, so you can change the time frame of the bias and the quants. Yes, Rash, you'll be able to see the recording. Yeah, the cost is not $9.99 DPAC. If you own the system, and I think you do, it's $5.99. Oh, you want to see Facebook? No problem. Let's take a look at Facebook. Let me just bring up the control panel. FB. It's in. And we'll just switch Apple to Facebook. There we go. Okay, I'm going to drop this. Let's take a look at Facebook. Let's start at 9:30 in the morning. On Facebook. All right. Here's the move up. We'll have an oscillator. Big move down. No oscillator signal. Got nothing. Nothing. Don't have anything. No entry. This is a real tiny move on Facebook. It's not much of a move. This is not an entry. There's your trade right there. There's one perfect trade. There's your next. Now that's a beautiful trade. 2 in a row. Here and here. And the risk to reward on Facebook, your stop is 25 cents. That's it. If Facebook comes back 25 cents, you're out. And this move is $1.02. So that's a 4-to-1 you get on that trade. You'd have to take 4 losers to wipe out this one winner. This is one of the reasons why you make great money with these entries. So I have nothing here. Don't have the dark pink, and it's protecting us. That's it. You only get 2 perfect entries, but that's all you need on one stock, because the whole, I'm just looking for something else. It's 1500. The whole idea is to trade and scan multiple instruments. And there's your first trade. This is actually your first. There's your second. And you may have pulled in a loser. I'll have to go back and find it right here. But your loss is only 25 cents. Here, your winner, again, it's $1.02. Your winner on the first trade is 60 cents. So that's about 3-to-1. Well, 2-to-1. So you would lose 25 cents on one share and make $1.62. I mean, the risk to reward is incredibly good. And that's FB. Okay, you want to see Walmart? We'll show Walmart. Walmart's actually a good stock because it's not tech. I really like Walmart too. I haven't traded it in a while, but here's Walmart. Put it in. Make sure it's in. Yep. Move this over. And let's look at Walmart. All right. Oof. Now, Walmart can probably be traded on a 2-unit Renko because it doesn't have the kind of volatility that tech does. So let's take it on a 5-2-10 and change the speed of the quant to 8 and background bias to 8. And I think it's going to trade better. Let's see if we get anything here. Here's one entry right here. Oops, it's a little tilted, but you can see the entry. Now, you're going to get this in real time. So it's going to move over one candle, and down you go. That's a huge move on Walmart. Just don't get this trade. Here's another winner. That is definitely big enough to count as a winner. Now, here's a loser. I'm not going to hide it. It's right there. And these are small moves. Right here and right here. You're not going to make much money here. It's your first target. If your first target isn't really small, don't know if these are going to get it for you. Right here, it's only 6 cents. It's not much of a move. That's it. So Walmart's a little bit tougher because it doesn't have the volatility. So you have this potential as a loser. This is a potential. This is another potential. And then you have that. And you have this. This is a huge winner. That's going to go 61 cents. Now, you remember your risk now is only 13 cents. So on a loser, your reward is so huge that even if you pull in 2 losers, one winner swamps it. And here's the other winner right here. Well, this is a modest winner, but it's definitely a winner. It's 20 cents, about 2 to 1. Now, I can tell you that this is a trade and a winner. This is what I'm going to teach you in the mentorship right here. And this is going to be a scanner alert because you've got the 50 down, the 15 down, you've got pink background, and you've got red money flow. And this would be an additional trade. I just don't want to go into it now because it's not confusing, but it's something that I want to teach. That is a valid entry. So that's Walmart. Obviously, the tougher to trade because it doesn't have quite the volatility, but one really gigantic trade right here. Okay, let's look at the SPY. I should have remembered that. We looked at the Qs. Now let's look at the SPY. I don't think I have it. I might. I do. And here comes the SPY. Okay, let's take it from the start here. Now the SPY has got to go on a 4, unfortunately. Hate to keep switching it, but it's too expensive. It's 10, 5, I'm sorry, 10, 4, 20, And background bias is 13 and 13. 13 and the quant's 13. Okay, here we go. Now there's an entry right there. Now for some reason the quant is yellow. I don't know why that is. Hold on 1 second here. Let me see if I have enough data. It might be what it is. Let me load 4 days and see if that helps. No, I don't know why it turned yellow. I have no idea. Hold on a minute. I think I can get it I think I can get it back. This is just Ninja Trader crazy stuff that happens. Remember, these are all fractal indicators. They all do multi-time frame analysis or multi-market analysis. And obviously they should never do it. Let me reload all historical data. We need that quant line. It's loading all the data. Now, it's only reading accurate off the right edge. And we need it better than that. There it is. Now, something's wrong with it because it's just reading red. Now, hang on 1 second. Let me just go into it. Oh, I put the input at 813. You know, it helps if you're off by a magnitude of 5 million. Okay, here we go. Now here's your entry right there. Perfect entry. Well, you just miss a bunch. Here's your entry right there. Sneaks in. That's too bad here. It's a great entry. Here's your short. Perfect. Down. Here's your short. Perfect. Down. I guess by 1 candle here. That's probably going to be an entry live. Here, no background, no quant, nothing. Here comes Shopify. That's probably an entry live when it misses by 1 candle. Nope, nope. Nope. Okay, so if we just scroll quickly on the SPY, we've got 1 entry here. Our risk is 25 cents. Our reward on this trade. Now it's maximum excursion. It's hard to get the bottom, but it's just a way of assessing. It's 59 cents. That's going to work. $0.66. $0.42. Now remember, it's 25 cents of risk. $0.68. I think that was it. And there's another one. 39 cents. So you really do well. And if you trade 100 shares, you're going to make good money, and there's another winner. That's a lot of money. You need a big account. It's 82 cents. It's a very big move, almost a buck on 25 cents of risk. So there was 5 or 6 or 7 winners, and there's absolutely no loser on the SPY. If there was, I would show it to you. There just isn't one. And the SPY ain't so easy, is not so easy to trade. I did Facebook. Okay, couldn't do that anyway. Yeah, yes, it fits Rate's Ninja platform. Let me just find out about that, Christopher. Christopher, it can. If you have Thinkorswim, we have an API. We can take your Thinkorswim data feed and hook it up to NinjaTrader, and all the stock data you get from TOS will power your Ninja. So you don't need an additional data feed. And actually, Rory is telling me it gives you real nice, clean data. And I have a kinetic data feed, which gives me 500 tickers. Your Thinkorswim's going to give you about 5 million tickers. This week, Ness, we're going to be all caught up. This week. It can work for futures, Stephen. I don't want to mention it because I don't want to raise it, but I'll show you. It works for anything. I mean, I'll just show you this really quickly. Let's just take a look at, hold on one second here. Now, I have to change the inputs. The inputs will give you, you don't have to worry about them. But, an optimized system obviously cannot trade at one speed. You can't trade Amazon on a 1 minute. And we need to change this to 8. And we need to change the quant to 8. I really wasn't going to get into futures, but the principles that govern price are the same. And if that's not the case, then the system really doesn't work. Here's a crude trade right here. Perfect. Now, this is a leveraged instrument now. So this is a lot of money. Here's another crude trade and another winner. Here's another crude trade and another winner. It's the wrong background color. There's another trade, and that's a huge winner. Depending upon your stop, that's a big trade on crude. Probably an entry because you have to push the candle over 1. Now look at that trade. Nothing here. Look at this at long. Now, there is no losers so far. There's another trade and another winner. Our first target on crude is 5 ticks. So you go 1, 2, 3, 4, 5. 6, 7. 7 winners on crude today, 0 losers. So it does. Harold, it does. I'm not gonna take the time because I don't have my FXCM data feed. Listen, it wasn't something that I wanted to get into, but here's the principle. The principle is the forces that govern the movement in price are the same on any financial instrument. Now, if anybody ever tells you, don't hold me to my spelling here. If somebody tells you that it only trades one instrument but not another, it only trades one time frame but not another. There's one out there that only trades the NASDAQ on a 450 tick. It's obviously broken. If the multi-time frame alignment and trend and the direction in correlative markets is true, it's going to govern the movement in price on every financial instrument on every time frame, which is again, I didn't want to get into that because I didn't want to overwhelm anyone. But since this is the truth, and it's just intuitive that if you have a multi-time frame alignment to the upside, you can see price always rises. And when money flow is positive, price also rises. It doesn't matter what the instrument is, and it doesn't matter what the time frame is. So yeah, it works on everything. Hold on, Victor. I'm sorry, Victor. I do, James. I trade the options, and I have an alert newsletter I send out for my options trades. Last year we made 105% over the whole year. You're going to get a lot of numbers where people tell you they make 10,000%, and they're baloney. If you can double your portfolio over a 12-month period, you're doing outstanding. And that's what we did last year. We had 133 closed trades, 78% were winners, 22% were losers, and we made 105%. And I'm recording it. I am recording it. You can use it for Forex, Harold. I just can't put the Forex up because I don't have the data feed connected. And I have to disconnect all these data feeds. But trust me, price on the Forex, which is what I had it set up for first. If you remember when I opened it up, what I had was a whole bunch of Forex pairs up there. It's going to give you the same entry in the same scanner alert. I just showed you futures and I showed you stocks. Forex, you would not be able to tell if I covered this upper left-hand corner, you would have no idea the instrument that I was looking at. You would not know whether it's a stock, a future, or a Forex. They trade exactly the same. Christopher, every time you change the Renko setting here, the open offset by 2, and we go in multiples of 2, you have to change the quant setting and the bias setting. But even if you're not one of the first 5 and you don't get the mentorship, Sergio's going to do all that for you, and we'll give you the entries. I mean, we want you to have the system and know how to configure it. So it's really simple, and I'll just type it out really fast. So I don't want to take, I'm already at an hour and a half. If it's a 2-unit Renko, it's an 8. If it's a 4-unit Renko, remember it's the next fib, it's a 13. If it's a 6-unit Renko, it's a 21. If it's an 8-unit Renko, it's a 34. If it's a 10-unit Renko, the inputs are 55. And then if it's a 12-unit Renko, then I think it's 89. So you just keep going up by a fib every time you increase the open offset by 2. It's really, really easy. And these are going to give you the correct speed of the quant and the correct speed of the background bias. It's uncanny how perfect it is. Yeah, I know, Harold. I put 813 instead of 13. Just a tiny mistake. If you want to trade live, Fitzroy, obviously you need live data. But a CQG data feed that you can get for 1 month for free will give you futures, but it's not going to give you stocks. And I'll show you my Ninja. My Ninja, what I do is I buy Kinetic. But I'm really paying for it, and I shouldn't. The only reason I buy Kinetic is because I have redundancy. I have a DAX feed. In case my CQG feed goes down, I have a bunch of other feeds, because I also have Thinkorswim, and I can hook it up to Thinkorswim. But because I have all those others, I just add it on, and it's not much of an additional cost. Fitzroy, you look for the scanner signal right here, the alert. It's going to be that orange flashing color. Open it up, the chart. It's either going to be green, 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 and you're going to look for a long oscillator, or if it's red, 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 you're going to look for a short. It's that simple. I mean, it literally takes you 15 seconds. And if you look at the oscillator position, if the short signal already occurred, just close up. You're going to get on multiple instruments, multiple signals. On the SPY, we were 7 today. We would have gotten all of them winners. The Qs, we had a ton of winners. They're great instruments to trade. It does work with Forex, Harold. Absolutely. Trust me, it does. I'm telling you, it does. Believe me. I'm not going to swear on my kid, because I just think it's bad luck. But believe me, it works. It works on stocks and it works on futures. It will work exactly the same on Forex. Believe me. If it doesn't give you the same entries on Forex, give it back. You're going to get exactly the same Forex entries. I'll show you exactly what I traded. I traded this for months until I ran out of energy. I would get up at 2 o'clock in the morning Eastern, trade the Aussie dollar, the euro pound, the euro yen, the euro USD, all these pound crosses, because it's the European session. So they trade those pound crosses like crazy. They trade the euro crosses, and I like the Aussie dollar, and I like the dollar yen. And that's what I traded on the scanner. I just kept them buttoned up until I got a signal. I opened it up, and I was good to go. And I got a lot of winners, and I had a trading room. Only I'm a single dad, and I just can't get up at 2 a.m. and then trade the futures market at 9 o'clock in the morning. It's just too much for me. I was like becoming exhausted. Oh, of course, Raj, that's the whole purpose. Yes. In fact, you can have crude, you'll notice right now, I have crude up on one chart, and I have Amazon and Shopify up on another one. As long as you have the data feed, you can mix and match. You could trade 2 Forex pairs, 20 stocks, 4 futures. You can do whatever you like, because the principles that govern the movement of price are the same. Now, the inputs will be determined by the speed of the instrument you're trading, obviously more so on stocks than anything else. Almost every Forex pair is a 5-2-10, not a 10-4-20. But you're going to have to modify the stocks. And some of that modification is per your desire. You can trade it fast or you can trade it slow, as long as you understand the settings. If you go from a 2 to a 4, the input goes from an 8 to a 13. So you can have up stocks, futures, and forex at the same time. We'll scan them all. It does, Harold. So listen, everyone. I mean, again, just really quickly, there's the offer. It's $9.99 lifetime. We make any upgrades, we always give them out. You're going to get this training sessions, videos, 450 videos in YouTube, and you're going to sit with me for a really good session. And if you don't get it after one, I'll do another one. Trust me, I want you to trade it profitably. I'll show you how to configure it. I'm going to show you an additional entry. And I'm not telling you that sort of as a mystery. I don't want you to look for it right now. The only thing I want you to do right now are cherry pick the best entries. But there is another configurable entry. You're just going to have to put in a little more work. But they're great entries. But you can trade anything you want on this. So listen, have a wonderful, wonderful evening. Whatever you do, I hope you make money. I think this is going to make you profitable, or I wouldn't offer it out. So take care, everybody. And have a wonderful, wonderful evening. And if you have any questions, just give me a call or send me an email. Bye-bye, everyone.